Good morning, dear students. Today we are going to see issue of shares. This is the first unit in corporate accounting. So let me start with what is share. A share may be defined as one of the equal parts into which the capital of the company is divided, entitling the holder of a share to proportionate of profits. Okay, so I will be explaining this thing with an example. So let us assume I am the company and I am in need of share capital. I will be issuing my shares to the general public. So you all will be the general public and you will be subscribing to my company. Okay. So we are going to see an example. A company may require a share capital of rupees 1 lakh. So it decides to issue 10,000 shares of rupees 10 each. Okay. So here rupees 10 is the face value of the share. Okay. So the company may issue shares at par, at premium or at discount. Okay. So if the company issues shares at face value, so in this case, if it issues shares at rupees 10 itself, then it is termed as issue at par. Okay. And the second situation is, if the company issues shares at a price higher than the face value. Same here, face value is rupees 10. If the company is issuing shares more than rupees 10, say for example 11, 12 or something like that, then it is termed as issue at premium. Okay. And the third situation is that if the company issues shares below that face value, so face value of the share is rupees 10 and the company issues shares at rupees 8 or 9, then it is termed as issue at discount. However, New Companies Act 2013, according to New Companies Act 2013, issue of shares at discount is not permitted in India. Okay. Now we are going to see about subscription. So one is under subscription and the other term is over subscription. If total number of shares for which applications are received is less than the number of shares issued, that is a situation called under subscription. Okay. And the last example I have told you, the company is issuing 10,000 shares. Okay, if the company receives less than 10,000 number of shares, say for example 8,000 shares, 7,000 shares or 9,000 shares, then it is termed as under subscription. Okay, and over subscription means when a company receives application for larger number of shares than those offered to the public, it is a situation of over subscription. So in the same example, if the company receives more than 10,000 shares, say for example like 11,000 or 12,000 shares, then it is termed as over subscription. Today we are going to see a problem in issue of shares at premium. So in this you should be very clear in these points. Okay, any company whose performance is very good and management is esteemed in the capital market can charge significant amount of premium. There is no restriction in the Companies Act on issue of shares at premium, and it will appear in the liability side of the balance sheet as securities premium. Now we are going to see a problem. Okay, so this problem I have taken from Corporate Accounting book, authors Reddy and Murthy. This is sum number 16 and page number 1.112. So let us understand the question first. Dear students, it is very important to understand the question. Okay. So A Limited issued 1 lakh equity shares of rupees 10 each. Here rupees 10 is the face value of the share at a premium of rupees 2 per share, payable as follows. So 2 rupees is at premium. So we are understanding that this company is issuing at premium. This 10 rupees will be collected as follows. Rupees 2 on application, rupees 3 on allotment, and with the adjustment of premium of rupees 2. My dear students, always keep in mind that either it is premium money or discount money, it will be received along with the allotment money. This thing we will see when we are seeing the journal entries. Okay. And next thing is that rupees 3 on first call and rupees 2 on final call. So this is the situation. And it is given in the question that all the shares offered were subscribed by the public. This line is very important. Okay, because the company is in need of 1 lakh equity shares, whereas it has received 1 lakh equity shares. So there is no oversubscription and no undersubscription. And cash duly received. So they have received cash for all the in all the aspects. Make the necessary journal entries. So we are going to pass necessary journal entries for this situation. Okay. So I request all of you to follow this methodology. First, you try to understand the question. You have some working notes. Okay, in this working note, make sure that how many number of shares the company is issuing, what is the face value of the share, and whether it is issuing at premium or it is issuing at discount, or the company is going to issue the shares at par. This thing you should be very clear. Okay. So the company has told that they are going to receive 2 rupees on application, rupees 3 on allotment, and as I told you before, they are going to receive premium money along with the allotment. So altogether they are going to receive rupees 5 on allotment. Okay, rupees 3 on first call and rupees 2 on final call. So altogether you are making this total 5 plus 2 7, 7 plus 3 10, 10 plus 2 12. So 10 plus 2 12. This both should get tallied each and every time. Okay, so if this is clear, you can proceed with the journal entries. Okay, and one more thing I want to make it clear. Each and every aspect we are going to pass 2 journal entries. For application 2 entries, for allotment 2 entries, for first call 2 entry, and for final call 2 entry. So altogether, if there are 4 situations, that means 4 aspects, we are going to pass 8 journal entries. So keep this in mind. So this heading is more important. Journal entries in the books of A Limited. Being account student, you should follow all these headings and this particular debit, credit, everything you should follow. Okay. And the first entry is the application money receiving entry. These 2 entries are regarding to application money. So first entry is bank account data to share application account. So how we are getting this 2 lakhs? 1 lakh, the company is issuing 1 lakh equity shares and share application money is rupees 2. So 1 lakh into 2 will be 2 lakhs. And the second entry is transfer entry. Application money that we have received, we will be transferring the same to share capital account. So share capital account data 2 lakhs, same 2 lakhs, and to share capital account. And most important thing is that at the end of each entry you are supposed to give narration. Okay. So these 2 entries are regarding share application account. And next 2 entries are regarding allotment account. As I told you before, we are going to make securities premium adjustment in third entry, that is allotment entry. This entry can be termed as due entry also. Okay. So the entry is share allotment account data, share capital account data to securities premium account. So share means share allotment account rupees is rupees 3. So we are putting here 1 lakh into 3. Premium amount as rupees 2. So 1 lakh into 2. So altogether here we are getting 5 lakhs the credit side. So the same will be coming in the debit side also. So share allotment account 1 lakh into 5. Okay. So as I told you, you are supposed to write the narration also being share allotment money due. Here in this third entry we are showing that this 5 lakhs is due through allotment and premium. And in the fourth entry we are showing them either we have received all the 5 lakhs or is there any pending. If there is any pending means we will deduct that amount, we will show the rest of the amount there. Okay. So the fourth entry is bank account data to share allotment account. So these 2 entries are regarding share allotment. As I told you before, for application 2 entry, for allotment 2 entry, and for first call 2. So now we are going to pass journal entries for first call. So first call, this is due entry for first call money. Share first call account data to share capital account. Okay. So as usual, the company requires 1 lakh shares and they received 1 lakh shares from public. So the share first call money is rupees 3. So we are getting 3 lakhs and the same money has been received. So the last entry in first call is bank account data to share first call account. And the last entry is regarding final call. Share final call account data to share capital account. So again 1 lakh into 2 because share final call amount is rupees 2. So this is the due entry and the last entry is the receiving entry. Okay, the sum is very simple. Okay, so you try to understand and follow the other problems also. Thank you so much.